Good morning, students. Welcome back to this discussion on accounting standards. So we have been discussing about the accounting standards which will have some impact on the financial statements. Okay, so that is chapter 7. So today we plan to continue on this. Yeah. So the previous session that we covered, okay, so AS5 was the one we were looking at. Yeah. So let me just share the presentation with you. So let's do a quick recap in terms of some of the areas that we covered. Okay, yeah, quickly. Now, in relation to this net profit or loss for the period, there are three terms we discussed. One that is what you call as profit from the ordinary course of business, or you can say, or from the activities which are there in the normal course of the business. So you can have a profit or you can have a loss. So that is all about the activities, which is the core area for the company. One can say, we can say which are the core activities, means something which you find in the normal course of the business. Correct? Then we also discussed about two more terms. One was extraordinary items and second was exceptional items. Right? So now let's do a discussion around this. If you can just help me understand what are these extraordinary items, what are these exceptional items. Over to you. Yeah. So what do you understand about exceptional item? What do you understand about extraordinary item? Over to you. Yes, quickly. About the extraordinary item, what is your understanding about the exceptional item? What do you understand? Quickly, huh? Over to you. Okay, great. Devu has answered this. Devu is saying that extraordinary items are the ones which you do not find to be occurring regularly. So that means they will be occurring not so frequently. Okay, Anil is saying exceptional is the relevant. Soumya says extraordinary means distinct from ordinary activities and not expected to recur frequently. Very good. Yeah. So extraordinary, as the terminology also suggests, what do you have in case of extraordinary? Extraordinary, we said that anything which is not in the normal course. Okay, of course, over here, the amount involved should also be something significant. And in relation to these activities, you'll also see that because these are not in the normal course, so that's why this will not be a thing which you get to see every now and then. Huh? So this is something which you will not find frequent. Correct? Now, as regards extraordinary items, what is the accounting requirement? So these are required to be presented separately in the statement of profit and loss. So there will be a separate line item. Plus, there will also be a disclosure in the financial statements. Correct? Correct? Yeah. So that's what you have in case of extraordinary items. Now, moving on to exceptional items. Now, what is your understanding of exceptional items? And how do you record exceptional items? Both the things. Quickly. Who will answer this? So what is your understanding of exceptional items? How do you record it? Quickly, huh? Exceptional items. So what are exceptional items? How do you define an item to be an exceptional item? And what is the accounting requirement in such a case for the exceptional items? Okay, great. So I think Sneha has answered this. It's a P&L item. Anil says it should be disclosed separately. Great. Rohan is saying something which is significant in nature and amount belonging to the ordinary activities only. Yes, very good. So now exceptional is not something which is not in the or not related to the ordinary activities. It is very much related to the ordinary activities only. But in this case, its size, its nature or incidence is such that you want to highlight it. Yeah, that's why you will keep it as a separate line item. Okay. Yeah. So that's the understanding you will have in relation to exceptional item. And here again, what is the requirement? You will present it separately and you will also disclose it in the notes to accounts. Okay. Yeah. So that's something you'll see in case of exceptional items. Okay. Now, other than exceptional item, there was also an area which is about the errors in relation to the previous years. Yeah, so that is what we discussed, which is also called as prior period items. So can you give me some understanding about this prior period items? Okay, so what do you understand about prior period items? Over to you. What were those prior period items? What do you understand about prior period items? Quickly. What is the meaning of a prior period item? Okay, Ron says when there is a mistake which the entity would have made in the previous years, yeah, and which you identify in the current year. Correct? Okay. Charandeep has the same answer. Okay. Mohammed is saying prior period errors. Very good. Almaz, Somya, they have the same answer. Now, in relation to prior period items, what will happen? Now, because you have come across such error in the current year, so that's why you'll have to record it in the current year. But this amount, or you can say this transaction or this event belongs to the previous years. So that's why this will also have to be presented separately. Okay. This will also be presented separately and there should also be a disclosure for this. Yeah. There will also be a disclosure for this. Correct? Clear? Then the next area that we discussed was about estimates. So can you give me some examples of estimates? We discussed some examples of estimates. Some examples of estimates that come to your mind. Over to you. Okay. So Rohan says useful life of PPE. Depreciation, yes. Change in useful life is okay. Yeah. Somya says depreciation. Devu says actuary. Yes, that's correct. Residual value. Yes, that's correct. That's also an estimate. Anil says warranty. Yes, warranty will also be an estimate. That's correct. Okay. Yeah. Now, in relation to estimates, we discussed that because they involve some sort of approximation. Okay. So that's why whenever we change that, how do you record it? You will record it prospectively. Correct? Yeah. So that will have to be recorded prospectively. Yeah. So that's the understanding that we have in case of estimates. Yeah. And for this prospective accounting, we also discussed the accounting requirement as to how that is required to be recorded on a prospective basis. Okay. So now we will look at, I think, one small example, and then we'll move on to the accounting policy as well. Okay, so let's look at an example. Okay, again, a simple one. Let's discuss that. Okay, from the past 5 financial years, an old outstanding balance of 50,000 was still appearing as sundry creditor in the current year balance sheet of People Limited. The company is certain this amount is not payable due to one or more reasons. Therefore, it decided to write off the said amount in its current year's books of accounts and also recognize it as income. The company treated the amount of 50,000 written off as a prior period item and made the adjustments accordingly. The company is of the view that since sundry balances were recognized in the previous years, its related written off amount should be treated as prior period item. Over to you. Now, in this case, what is your view? Quickly. So, what is your thought? So, the company has already done an accounting. So, what do you think? Is this accounting correct or not correct? Tell me. What do you think? Do you agree with this accounting requirement or not? Okay, so I can see one response coming up. Devu says it's not prior period item because it's not an error. Okay. Okay, Almas says it's not a prior period item because it was not due to error in the previous years. Okay, what about others? Quickly, will you call this as a prior period item? Okay, she's saying that it's not a mistake, so maybe an exceptional item. But why do you think it's an exceptional item? Romeo says this accounting treatment is incorrect since it's not an error and it's something which is in line with the requirements of the company which has taken place in the current year. So that's why you will not be calling it as error. Yeah. So now in this case, when the company has adjusted one amount, okay, what is the adjustment? A balance was appearing, so the company decided that let's write back. It's not payable anymore. Correct. So it's not an error. So to say it's an error will be incorrect. Why? Because there's no mistake which has taken place in the previous years. Yes or no? Yeah. So there's no mistake as such. Okay. So that's why to treat it as prior period item will not be correct. Yeah. Now the other question is that can we call it as extraordinary or exceptional? See, looking at the amount, it doesn't appear to be exceptional or extraordinary also. Yes or no? Yeah. Clear? Okay. Clear on this? Yeah. So to say that whenever you have any adjustment in relation to the balance, so that will become a prior period item will not be correct. Okay. All right. So now let's move further. Now let's talk about it in terms of the policy. Now, and I'll just share one document. Yeah. Okay. Now let's try to understand about the policy. Okay. So now what is an accounting policy? So the standard says that in relation to the accounting policy, anything which the entity do in terms of the accounting conventions, accounting practices, okay, basis which basis which company is recognizing various items in its financial statements. Okay, so basis which recognition or measurement is taking place. Yeah, so that is what you call as accounting policy on the part of the company, right? Now, some of the examples of the accounting policy, if one has to look at, we can say inventory valuation. Okay, so in terms of inventory, when you measure inventory at FIFO or at weighted average? Yes or no? So what is that? That is nothing but an accounting policy. Clear? Yeah. Now, in relation to the accounting policy, a consistency is required. Okay. So now to say that a company will change its accounting policy every now and then, will it be appropriate? Answer is no. Okay. So accounting policy is something that the company should keep it in a consistent manner. It should not be changing every now and then. Yeah. Because that is not appropriate on the part of the company. Let's suppose in a particular year, company is recording inventory at FIFO. Let's suppose after 2 years, they change it to weighted average. Say then again, you see a change, company moving back to FIFO. So will that be appropriate? Answer is no. Why? Because in such a case, consistency is not there. The numbers which the users will be looking at, okay? So the comparisons, the analysis that they will be looking at, that will be missing. Yes or no? Yeah. So that's why any accounting policy is required to be followed in a consistent manner. Year on year, changes should not be there in respect of accounting policy. Clear? Yeah. But at times, changes may be required in the accounting policy. Okay. So now the question arises that if let's suppose a company wants to change its accounting policy. Okay. So the company wants accounting policy to be changed. Now, when can the company change its accounting policy? Yeah. So the standard gives you certain situations during which may require the company to change its accounting policy. Number one, or only if such situations are there, accounting policy can be changed, otherwise not. So let's look at that. Yeah. Number one, it is required by statute. Statute means it's a legal requirement. Let's suppose because of any legal requirement, accounting policy has to be changed. Okay, so that is when the accounting policy will have to be changed. Why? Because if there is a statutory requirement, then of course you'll have to change it. Correct? That's first. Second, if let's suppose accounting standard requires any change. Now, when would that happen? Say, for example, a new accounting standard is issued, means a revised one, and the accounting requirements are different. So earlier, the way accounting was required to be done, now that has changed. Okay, so that may also result in change in accounting policy. Correct? Third, let's suppose within the accounting standard, some new clauses have been added, or maybe a particular para has got changed. Means within the accounting standard, some changes have taken place. Correct? Now, these are some of the situations which may result in change in accounting policy due to changes in the accounting standard. Right? So now, if we look at this first situation or the second situation, so will that be optional on the part of the company? Answer is no. This will be a mandatory requirement. Why? Because any statutory requirement is mandatory. Any accounting standard is mandatory. So that's why in these first two situations, in these first two situations, accounting policy will have to be changed mandatorily by the company. Now, third situation. Now, this third situation is very important. Yeah, because this will require some sort of analysis by the company. Now, what does it say? It says an accounting policy can be changed when it is considered that the change would result in more appropriate presentation of the financial statements of the entity. Now, this is not something which you call as mandatory. Okay. This is something which will be a voluntary change. Voluntary means a company may decide to change its accounting policy, not because the statute is requiring, not because the accounting standard is requiring, but because the company wants to do that. So, do we have that window available in the accounting standard for doing that? The answer is yes. Okay, so there's one way through which accounting policy can be changed. But in this case, again, one will have to analyze that whether this change is resulting in more appropriate presentation or not. Okay, for a company, it will have to be justified. If let's suppose company is following weighted average for inventory valuation year on year. In a particular year, company wants to change it to FIFO. So the question may arise that why do you want to change it to FIFO? Okay, if the company says that by changing to FIFO, it will be more appropriate presentation. So was the more appropriate presentation not considered in the previous years? Yeah. So that sort of analysis is important. Okay. So that's why this third situation, or you can say this third scenario, even though it's provided by the standard, it's not easy for the company to follow this. Okay. Why? Because it's something which is voluntary. Correct? Yeah. Clear on this? Clear on these three situations? Yeah. Okay. Now, okay. Anil is saying mandatory is the one as per law and AS. Yes, that's correct. Yeah. All right. So now, at times, a policy may be changed. Okay. So now we are looking at a different situation. A policy may be changed. Okay. And we may want to consider whether such a change is a change in accounting policy or not. So let's try to understand this. See, when let's suppose a company was entering into some contracts, and in respect of the contracts which the company was entering into, what do you find? That now the contracts have changed. Okay, the terms and conditions have changed. So in relation to the previous contracts, for the new contracts, okay, which did not exist earlier, a different accounting requirement is there. So will the company require an accounting policy for the new contracts? Tell me, will the company require an accounting policy for the new contracts or not? What do you think? Tell me, will the company require an accounting policy for the new contracts or not? Tell me quickly. Yes. Now, question arises that when a company will bring in an accounting policy for the new contracts, which did not exist earlier, or you can say new transactions, okay, or new policies, new internal policies, let's suppose. Should that be considered as a change in accounting policy? Answer is no. Why? Because when you did not have any contracts in the previous year, so correspondingly, there was no policy in place. Okay. Now, when you bring in those contracts or when you enter into those contracts, so the company will put up a policy in place. Yeah. So therefore, in such a case, it should not be considered as a change in accounting policy. Okay. It should not be considered as a change in accounting policy. Rather, what do you call it as? A new accounting policy. Okay. But it's not a change. Change means when an existing policy is changed. Okay. For the similar type of transactions, for the similar type of contracts. Let's suppose you had some transactions in the previous year, you have the similar type of transactions in the current year. But the way you are recording those transactions in the previous year, now you have changed the way, or you want to change the way. That is what you call as change in accounting policy. But if let's suppose you had different transactions in the previous year, different in the current year, for different set of transactions, you'll have different accounting policy. Yeah. So just because transaction is different and therefore you bring in an accounting policy doesn't mean that it's a change in accounting policy. Everyone clear on this? Yeah. Okay. Okay, great. So Ishan is clear. Tanisha is also clear. Okay, great. Now, a very small example. Introduction of formal retirement gratuity scheme by an employer in the current year. Okay, so it's a kind of employee benefit which has been introduced in the current year. So the company has brought in a retirement gratuity scheme in place of ad hoc ex gratia payments. So in the previous years, this policy was not there. This employee benefit was not there. In fact, the mechanism of giving the employee benefit was ad hoc. So what do you call it as? Change in policy? Answer is no. Why? Because an employee benefit which did not exist in the previous years. Okay. If you bring that now, then you will say it's a new transaction. Yes or no? Then you will say it's a new transaction. And for the new transaction, or for this new type of employee benefit, you will have to bring in one accounting policy. Right? Clear on this? Yeah. Any questions so far? Over to you. Any questions, any doubts? Then we'll look at some examples. Huh? We'll start picking up some examples then. Any questions, any doubts if you have? Okay, Rohan is asking, sir, both are gratuity only, isn't it? So Rohan, you're right that both are kind of gratuity only, but the schemes are different. Okay, so when you have a different scheme, so you will not say that it's one category. Yes or no? Soumya is asking, sir, what is different in substance? How do they differ? So let's try to understand that in substance, how do they differ? So now, let's suppose this is previous year, this is current year. In the previous year, company had a policy. What was the policy? That if the employee will retire, so company will make some payment. Okay. There was no basis for calculation of that payment. Whether that payment will be made or not, that was also not clear. Okay. So it was, you can say, at the discretion of the management. So if the management will decide it, they will pay it. If the management will not decide, they will not pay. What will be the formula for calculating that amount? It was not clear. And in fact, this was the policy of the company. Okay. So you can say a retirement benefit was there. Now, in the current year, in terms of this retirement benefit, what has changed? So this old retirement benefit has been discontinued, right? A new retirement benefit has been introduced. Now, in this case, employer has decided that every year, so I'm just, bringing in this policy. So you may be thinking, sir, where is it written? That's only for your explanation. Let's suppose employee says that at the time of retirement, 10 days salary for each completed year of service will be provided. For each completed year of service will be provided. That's a new policy. Earlier, it was not there. Yeah. So for recording this previous policy, company had some accounting policy. Now, will you say that these two policies are same? Tell me. Tell me. Can we say that? Rohan is asking ad hoc. Ad hoc, I explained you that management will decide whether to pay or not, what amount to pay. Yeah. Will you call these two policies as same? Tell me quickly. Soumya, Ishan, they are saying no. So when the policies or employee benefits are different, okay, so the company will have some accounting requirement for these two employee benefits. Yes or no? Now, if let's suppose there was a situation that company is continuing with this retirement benefit. Okay, let's suppose there was some way this was getting recorded in the previous year and company continues with this in the current year. Okay, so forget about new one. Company continues with this in the current year. But the way of recording this ad hoc benefit in the current year, let's suppose company wanted to change. Okay. That is when you call it as change in accounting policy. Why? Because for the same employee benefit, for the same transaction, accounting was done in a different manner in the previous year as compared to current year. That is a change, right? But when you have a new employee benefit in the current year, it's a new employee benefit in the current. For a new employee benefit, you'll have a different accounting requirement. Is it necessary that the accounting requirement for this new employee benefit should also match with the accounting requirement of the of any other employee benefit? Is it necessary? Is it a mandate? Is it a mandate? Tell me. Chandeep says no, it's not mandatory. Okay, clear on this? Yeah. Let me give you one more example. Say the nature of inventory of the company has been similar. Okay, so the company is doing same set of business year on year. There's no change in the previous year as well as current year. So that's why the type of inventory company holds, all of these things are same in both the years. Okay, but last year company followed weighted average. In the current year, company wants to follow weighted average, sorry, FIFO. So now for the similar type of line item, which existed in the previous year as well as current year, method of accounting being followed by the company, is that different or not? Is that different or not? For the same thing. Yeah, for the same thing. Yes or no? Yeah. So this is what you call as a change. Clear? This is what you call as a change in policy. Now clear on this? Tell me, everyone clear on this? Any questions, any doubts so far? Okay, great. Soumya, Ishan, everyone is clear. Very good. Any questions? No? Sure. Any questions, any doubts? No? Sure. All right. So then I think we can look at some examples now. Let's look at this question number 2. Yeah. During the year X1, X2, a medium-sized manufacturing company wrote down its inventory to NRV by 5 lakh. In this case, do you think a separate disclosure is required? If yes, why? Means in a very, very simple manner, you can just comment on the accounting requirement in this case. So what will be the accounting requirement in this case? Over to you. Over to you. Devu says it's an exceptional item. Rohan says it's a change in policy. Very good. Then I think she is saying it's an exceptional item. This amount is significant for the medium sized firm. Ishan says separate disclosure is required as per the accounting standard. Almas says it's an exceptional item, so disclose separately. I think majority of you are calling this as exceptional item. So can you also tell me why it's an exceptional item? Meenu says it's exceptional. So if you are calling this as exceptional item, why do you think it's an exceptional item? Over to you quickly. Over to you quickly. Why do you think it's exceptional item? So what makes you say it's an exceptional item? See, if you are considering exceptional, then there must be some reason. Yes or no? Yeah. So what is your rationale? Rohan says not exceptional item because the amount is not significant. Now there again, Rohan, why do you think amount is not significant? Yeah, so how do you decide amount is significant or not? Somya says write down of inventory is exceptional item. Okay. Anyone else? No. See, in this case, if they are asking about write down of inventory, so let's try to understand as to why they may be asking about separate disclosure, because we understand separate disclosure is required for extraordinary exceptional items, correct, or the private items, correct. Now in this case, although the case under the consideration does not relate to extraordinary item, but the nature and amount of such item may be relevant. Yes or no? When items of income and expense within profit or loss from the ordinary activities are of such size, nature, incidence that their disclosure is important. So what do? You will disclose them separately. And what do you call it as? Exceptional items. Okay. Yeah. So in this case, because it's a write down, or even if let's suppose there was a reversal of such type of thing, what will you call it as? Exceptional. Yeah, but here again, like Rohan just mentioned, a question may arise that, sir, how do we decide whether this amount is significant or not, and what will make you assess these items requiring a separate disclosure? See, again, that will have to be dependent on the materiality, the significance considering the size of the company. In this case, okay, you can just explain the concept and you can then answer that considering the importance, looking at the size of the company, looking at the amount involved, you'll decide this. Okay, clear? All right, so let's look at the second part. A company signed an agreement with the employees union on 1st September 2000 X2 for the revision of wages with retrospective effect from 30th September X1. Okay, so this would cost the company an additional liability of 5 lakh per annum. In this case, what do you think? A disclosure is required, a separate one? Yes or no, and why? Over to you. In this case, do you think a disclosure will be required, separate disclosure will be required? Yes or no, and why? Here again, Soumya is calling this as exceptional. What about others? Okay, she's saying yes, sir, disclosure is required because it's again something unusual, is it? Okay, so let's look at the solution now. See, it is given that revision of wages took place on 1st September X2, but with retrospective, it means with from back date, this calculation is required to be done. Therefore, wages payable for the half year from 1st October X2 to 31st March X3 cannot be taken as an error or omission in the preparation of the financial statements. And hence, this expenditure cannot be taken as prior period. You will not say that this was an error. Why? Because this agreement has got signed in the current year. Yes or no? Yeah. So company didn't miss out when the amount is not finalized, when the agreement is not signed, when the terms are not there. So how will you record that in the previous year? Okay. Yeah. So in the given case, what do you do? Additional wages liability should be included in the current year's wages, no doubt, right? So it may be mentioned that additional wages is an expense arising from ordinary activities. Such an expense does not qualify as extraordinary item. Okay, this is not extraordinary in nature. However, as per AS5, you may have to evaluate whether its amount, its quantum, okay, looking at the size of the company is so significant that you require a separate disclosure for the same. Okay, so now here again, if you look at the solution, so the solution is just trying to explain that looking at the size of the company, one may have to evaluate that whether a separate disclosure for the same should be required or not as an exceptional item. Clear on this? Yeah, yeah. Any questions so far? Quickly, over to you. Any questions, any doubts so far? Then we'll look at some more examples. Over to you quickly. Any questions? Quickly? No? All right. So let's look at the next example. Huh? Okay. So let's look at this question 4. Part B, huh? Because part 1 we have already discussed. Explain whether the following will constitute a new accounting policy or a change in accounting policy. Part B. Management decided to pay pension to those employees who have retired after completing 5 years of service. Such employees will get pension of rupees 20,000 per month. Earlier, there was no such scheme of pension. Over to you. I think it's a very simple one. In this case, will you be calling this as a change in accounting policy? Yes or no? Charandeep says no. Says no. Almas says no. Can you tell me why no? Why do you think it's not a change in accounting policy? And what will you call this as? Tanu says no. Charandeep says, sir, it's an introduction of new scheme. So company has put in place a new scheme. Okay, so when you have a new scheme in place, you don't call it as a change in accounting policy. Why? Because for a new scheme, if a different accounting requirement is there, yeah, for a new scheme, when a different accounting requirement is there, so you'll have to bring in one accounting policy. Yeah, and if that accounting policy happens to be different from any one that you have in place for any other type of employee benefit, so it's not a change. Correct? It's not a change. Right? Clear? Everyone? Very good. Next. Okay, so now the next one. In the current year, A Limited changed the depreciation method. Now, please look at it carefully. A Limited, a company, changed the depreciation method from SLM to WDV. Okay. So earlier for computing depreciation, company was using straight line method. Now the company has started using written down value method. When A Limited recomputed depreciation retrospectively as per the new method, deficiency arose in depreciation in respect of past years. Therefore, it reduced the carrying amount of the asset by the amount of deficiency, and such change in the carrying amount has been debited to statement of profit and loss as an extraordinary expense. Whether the change in carrying amount due to change in depreciation method should be treated as extraordinary item or not. Tell me quickly. So should this be treated as extraordinary item or not? Great. Devu, Tanu, they are saying yes and no. So I can get different answers now. Okay, Kirti is saying yes. Then I think she's saying depreciation is accounting estimate. Change can be made prospectively only. Okay, so the treatment is not in line with what is required to be done. It's change in estimate, not extraordinary. Mohammed says yes, it's a change in policy. Tanu says it's a change in policy. Okay. Now in this case, see, when you change the method of depreciation, first question that arises is that will a disclosure be required? Answer is yes. Answer is yes. Why? Because we have changed the method of depreciation. Okay. But will you call this as extraordinary item? No. Because depreciation computation is very much a part of the business activity. Yeah, it's in the normal course, one can say. Yeah. So as regards the requirement of the question, what is going to be your answer? No. Okay. You can also explain as to what is an extraordinary item, right? So therefore, clearly, when you change the method of depreciation, it doesn't meet the requirement of the definition of extraordinary item. So therefore, it will not be an extraordinary item for sure. Correct? No. Now the next question arises that when you change this method of depreciation, okay, so what do you call it as? Change in estimate. Change in estimate, right? Why? Because depreciation is nothing but an estimate. So if you change useful life, if you change residual value, if you change method of depreciation, what are these? These are nothing but the estimates. So any estimates you change, will you require a disclosure for the same? Answer is yes. Answer is yes. Okay. Clear on this? Everyone clear? Any questions, any doubts that you may have? Let's discuss that. Yes, quickly. Any questions, any doubts that you may have? Let's discuss that. Then we'll move further. Tanisha is clear. Just a minute. Let me just open another document. All right. So now we are through with this AS5. So what I'll do is I'll just move on to the next accounting standard, or you can say your next unit, AS11. Okay, again, an interesting standard, and this will be dealing with some different sort of transactions. But before we move on to this, okay, before we get on to our discussion on AS11, any questions, any doubts that you may have, please let me know. Okay. Any questions? Okay, so I can see one query from Ishan. Ishan is asking, just a minute. I think there's one query about this. Again, the name is missing. Can you please pick up on your queries? Let me just pick up your queries one by one. I think we've got some queries. See, MCQ and all, we can pick up Soumya later on, maybe towards the end. Yeah, but as regards this, Ishan, can you please explain what's the query? Because I'm not clear on your query. Over to you quickly. Yes, Ishan, please go ahead. Please pick up.
Sir, I want to ask, like in question 2, second part,
Right.
it says that it is not an exceptional item, neither it is extraordinary, nor it is prior period. So, how we will determine as per the question what it is?
No, so what makes you say that it is saying neither or extraordinary nor prior period nor exceptional? So where do you find that written in the question?
So it's
Because
written
if
no,
you look
like
at the
the
solution, okay, let me just go back to the solution. Just give me a minute. I'll have to open that document. Just give me a minute, Ishana. Okay, so if you read the solution, it says, first of all, it is explaining you, huh? And then it says it cannot be taken as error or omission. Yeah, so question is saying it's not a prior period item. Do you agree with this?
yes, sir.
Okay, very good. Then it says it may be mentioned that additional wages and expense arising from ordinary course. So that's why it's not extraordinary item. Do you agree with this? It's not
Yes,
extraordinary, right? So two things have been sort of removed. So
yes,
while answering that, it's saying it's neither prior period nor extraordinary. But for exceptional, solution is saying this. It says, however, as per AS5, when the items of income and expense within P&L, okay, are of such size, nature, incidence that their disclosure is relevant, nature and amount of such item should be disclosed separately. So it is calling it as exceptional item. Okay, that's
sir,
what you understand about exceptional only. So if
but
you
for
read this
exceptional,
para, this is exceptional only.
yes, sir, but for exceptional we need significant size, no?
Correct. So that's why. question, sorry, that's why when they have answered this, so what did they tell you? They are saying that you should be looking at this aspect. Okay. So the answer is not saying that you will consider this as exceptional for sure. Okay. They are saying, however, as per AS5, you need to evaluate this. Okay. You need to evaluate this. That's why they have not explicitly, or you can say very specifically, called this as exceptional item. Okay. So they have not used a sentence that this is an exceptional item. They are saying apply this criteria and consider this as exceptional. Now, coming back to your point. Now, for you to say that, sir, you need a very significant amount, correct?
Yes, sir.
Now, for this entity, what makes you say that 5 lakh is not significant? We don't know. Yeah, maybe it's an entity for which 5 lakh is very significant amount. Yeah, but we don't know why, because we do not have the size, we do not have the balance sheet, we do not know about the P&L, what is their profit, what are their revenues. We don't know about it. We do not have that information. So that's why while answering this question, what do? You'll have to say that this is what the exceptional items criteria requires. So see, in the exam, examiner is just trying to test your knowledge. Okay. So now, while answering this question, you have responded to the examiner that, see, it's not private item. You have explained this. You have explained this is not extraordinary item. Yeah, clearly. Why? Because forget the amount, this doesn't meet these two criteria. But for the third thing, for exceptional, you are telling him, see, I know the definition of exceptional item, but that's not something which is possible for me to assess. Okay. So there again, you can draw assumptions. You may say that this amount appears to be quite significant, or I am assuming this to be significant considering the size of the company, and that's why I'll call it as exceptional. Or you may also draw an assumption that maybe this is not significant considering the size, and that's why even though this is the criteria, it may not be an exceptional item. Clear, Isha?
So, sir, we will give on with the basis of our assumption that it is extraordinary, it is exceptional or not.
Yes, that's correct.
Okay, sir. Thank you, sir.
Okay. But please also understand that your assumption should be in line with the factual information which is available. That is what you should always do. Huh?
Yes, sir.
Try to reach as close as possible to the facts which are explained in the question. Okay. And try to make sure that you are demonstrating your knowledge about the concept which is required to be tested. Okay. Yeah. And that's why in the solution, what do you find? Okay, this explanation has been given about exception item. Clear? All right. So then I can see Nidhi is asking, Nidhi, can you please explain your query? Shiv, I'll come to your question next. Yeah. Nidhi, can you please explain your query? Nidhi, over to you. Nidhi, quickly, are you there? Yes, please explain. Please pick up. Yes, Nidhi, over to you quickly. Shiv, I think you can come up with your query. I think Nidhi cannot speak.
हेलो गुड मॉर्निंग सर।
Good morning, Nidhi.
सर मैं ये जानना चाह रही हूँ कि मतलब हम इस फाइनेंशियल अकाउंट में जैसे AS5 का यूज़ कैसे करते हैं, मतलब क्या पता करने के लिए हमें AS5 का यूज़ करना होता है, ये जानना है।
So AS5 के use के लिए, while we went through this AS5, so can you tell me what all things we have discussed in AS5? What are the things that we covered in AS5? What are the
नेट
concepts?
प्रॉफिट
Sorry.
Net profit and loss in the period.
Okay, what else? Fast and loud, please.
तो नहीं है।
Quickly, Nidhi, you're there.
No, sir.
So in AS5, can you tell me what all things we have covered?
The changes in accounting statement.
Changes in accounting statement. What do you mean by that? Have you been able to cover this AS5 or you have just joined?
सर अभी कवर नहीं हो पाया है।
Sorry, I can't hear you, Nidhi. Nidhi, I can't hear you. So let me just quickly explain you. See, there are a few concepts we discussed: extraordinary, exceptional, changes in accounting estimates, changes in accounting policies. I'm not sure whether you have been able to attend this or not. So it appears as if you were not there. That's why you have this query. Okay, so all of these concepts, how do you get to know? By reading AS5 only. Yeah, and same goes with any other standard. So what is the use of any standard? So help you understand about different concepts. Okay. So all of these concepts which are there, they are coming from AS5. And how are they required to be presented in the financial statements? What are the disclosure requirements for exceptional item, extraordinary item, if at all there is a change in estimate, if at all there is a prior item? That comes from AS5 only. Okay. Yes. Shiv, please go ahead with your question. I understand you had a question. Shiv, over to you. Yes, Shiv, quickly. I understand you had a question.
Yeah, good morning, sir.
Good morning, Shiv.
Sir, my question is, if any law come from government,
Right.
then can a company is need to follow like ordinary item or exception item?
So what type of law you are saying? Will that law require any change in accounting requirement? Is that the question?
Right, 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 sir.
Okay, so now if let's suppose a law requires a change in accounting treatment, then the company will have to change the accounting policy. So then you'll have to give the disclosure of changes in accounting policy.
Okay,
Okay. That will, when you change an accounting policy, that will not, or the impact, if let's suppose when you change the accounting policy, so such an impact you will not be calling it as exceptional or extraordinary. Why? Because such an impact is arising because of change in policy. And please
okay,
also try to understand what is the objective. Objective is that for such type of impacts, user should be given some additional explanation over and above what is generally there in the financial statements. Or in a way, you're just trying to highlight that.
okay,
Okay. So if let's suppose there will be a change in accounting policy and you disclose that. So the user will be able to read that or not, understand that or not, that during the year this change had taken place. And because of this change, this is the impact in the financial statements. Correct. Yeah.
okay, sir. Okay,
Yeah. So that's how you will be treating that.
okay, sir.
Okay.
And then, sir, one more question.
Yes.
Uh, what is AD or HOC and ex gratia?
Okay. ADHOC is what you call as ad hoc.
Ad hoc.
Ad hoc. Ex gratia is an employee benefit. Employee benefit means let's suppose an employee retires.
Okay,
Company plans to pay him something at the time of retirement. That is what you call as ad hoc ex gratia. Now, what is the meaning of ad hoc? Ad hoc means for which there is no system or policy in place. Means There are two types of situations you can look at, and that's how you'll get to know the meaning of ad hoc. See, there's a company which has a policy in place. What is the policy? That any employee that will retire, he will be given 1 month salary extra. Okay. Yeah.
Okay.
So that's there in the policy. So any employee who will retire, so company has a clear cut policy. So yeah, so there's a clarity. Now there's another company. Now this company gives some benefit to the employee at the time of retirement, but there's no clarity. So every time the manager who will be there, the reporting manager or the senior, so he or she will decide that when the employee will retire, what is required to be paid to him, or maybe the owner of the company will decide. So this is what you call as ad hoc, means anything can be done. So there's no clarity. Yeah, so that becomes ad hoc. Clear? Yeah, Shiv, clear? Anil is saying, sir, whether, sorry, I'm not sure. Maybe there's some typing mistake. Anyone else? Any more questions if you have? Quickly, if you have any more questions, any more doubts, please let me know. Any more questions, any more doubts if you have? Quickly, over to you. No? Sure? Clear? Everyone? I think your name is missing, so there's a query around the last illustration. Can you please explain quickly? Can you please pick up? Yes, please go ahead. What's your name? You can
Sir,
just,
my name is
what's
sir.
your name?
Sir, my name is Smriti, sir. I'm
Smriti.
not
Okay,
able
great.
to. Yeah, I'm not
Yes.
able to change my name, sir.
No, no, that's okay. I would request Manish if you can do that. But please go ahead with your question, Smriti.
Yes, sir. Like in the last illustration, they were talking like depreciation method is changed retrospectively. So my doubt is like, how can they change retrospectively? It is an estimate, right? So it should be changed prospectively only, right?
Correct. So it appears that they have made some mistake, but idea was not to get into that. Okay, so if you look at the solution, so the solution is not moving towards that. Why? Because the requirement of the question was different. So maybe they made some mistake. Okay, but the question was very specific. That if so, the requirement of the question was very specific. That if let's suppose method of depreciation is changed, so will you be calling it as extraordinary item or not? So that's where we are focused. Okay, but your point is correct.
Sir, they have written that it will be treated as a normal expense. But how will it be treated as an expense, sir, in the first place? Like the treatment itself is wrong, right?
No, no. So there again, you need to understand the context. So the question is focused on two things. First, there has been a change of depreciation method during the year. Okay. Number one. Number two, they want to check whether it's an extraordinary item or not. Okay. So that's how this entire solution has been covered. So this entire solution is focused about these two things only. So when you say they are saying it's a normal expense, so the normal expense in the context of this change of depreciation method which has taken place, not in the context of any accounting requirement, if at all there is wrong or a mistake. So they are not talking about that, that this computation is correct. Okay, so nowhere they have mentioned. So let me just read this for you. Okay, so they have nowhere specified that this method of calculation is normal or this method of calculation is correct. Okay? They are saying that this change in method is something which will result in a normal expense. Clear on this?
Yes, sir.
Yeah.
Sir, and one more doubt, sir.
Yes.
Like retirement benefits, sir, we will be estimating, right? So how are we treating as like accounting policy? Like it shouldn't be treated as accounting estimate.
No, so when you talk about retirement benefit, okay, let's take an example of gratuity, for example. And gratuity is something that we discussed under AS 15 also.
Yes, sir.
See, anything that you do in the financial statements, anything that you record can be done using two bases. Either you'll know the amount with certainty, okay, or you'll not know the amount with certainty. So that's where you make estimates, correct? But whether it's estimated or it's fact based, or you can say with 100% accuracy, in both the cases, some accounting mechanism will be followed by the company or not.
Yes, sir.
Yeah. So therefore, even if you talk about, say, depreciation, so depreciation in terms of its computation is an estimate, but this is also an accounting policy which the company is following.
Yes.
Understood? Yeah. So now, when they are talking about those retirement benefits, so whether those are required to be estimated or not, there again, it's an accounting policy. Yeah. Now, if let's suppose this method of estimation changes, then you will say that earlier there was some method of estimation. Now this method of estimation has changed for the similar type of employee benefit. Please understand, for the same employee benefit, if you are changing the method of estimation in 2 years, then you are absolutely right. You'll say, sir, it's a change in estimate. Why? Because for the same employee benefit, my method of calculation was different. Why? Because estimates were involved. Now again, my method of calculation is different. Why? Because again, the estimates are involved. So over the period of time, I may have to follow different approaches. But if let's suppose it's not an estimate, it's an employee benefit with which for which you can just calculate the amount. Say for example, you reach out to actuary. Okay. So now actuary is what? Actuary is also an estimate. Actuary is giving you a fair value. So that is nothing but an estimate. Now let's suppose in the current year for same time of employee benefit, you don't reach out to actuary. Instead, you do this calculation on your own. And that has been made as your method of calculation. So will that be appropriate? Answer is no. That's what you call as change in accounting policy. Clear?
Yes, sir. Understood.
Yeah,
Thank you, sir.
sure. Yes, Shiv. So I think you will be getting some more questions. Yeah. And anyways, a lot of questions are available. So there's not a specific question which I can just tell you. I would suggest everyone to go through the questions of the study material. Okay, because Shiv is requesting, sir, where do we pick more questions from? Of course, study material, you should be looking at, your RTPs, your past year question papers, all of these things. I think that should be good enough. Okay. Any more questions? Any more doubts if you have? Yes, Shiv. I think Shiv has one more query. Yes, Shiv. Yes,
Sir,
Shiv,
my
please go ahead. Yes.
sir, my doubt is, can any company can change depreciation rate for his internal benefit or not?
What is the
Because it
meaning
is
of internal benefit?
internal means some company not want to show their actual benefit, and
Okay.
for that he can make you know extra losses or
So
expenses.
you're saying they want to increase their profits, and that's why to change the depreciation expense, or maybe to increase or decrease. Can they do
Rate, yes,
this? Is that the
depreciation rate,
question?
because sir, depreciation rate, because it is already given by accounting standard. Accounting depreciation rate is already given by government, or so any company has right to change depreciation rate.
Okay, so let me just clarify a few points over here.
Right.
One, that now under the accounting standard regime, you do not follow any depreciation rate. Okay, so
Okay.
government has not given you any depreciation rate. That's first point. I think maybe you have not been able to cover AS10. So I would request you to please revisit AS10. You will get some more clarity on this. Number one.
Okay.
Number two. Now, if you say that depreciation rates are not given and we do not follow depreciation regime, so that means uh, for the method of calculation, we'll need something. So now, for the calculation of depreciation, you are required to follow useful lives. And these useful lives are the one which are estimated by the management of the company, and that's why
Okay.
they are called as estimates. Okay, that's why
Okay,
they are
sir.
called as estimates. Now, in respect of these estimates, of course, because these are estimates, so that's why they are subject to manipulation by the company. So can the company change that? Answer is yes, the company can change that, but only when such changes are important and relevant, not because the company wants to manipulate the profits. Okay, so that's how this is required to be done by the company.
Okay, sir.
Fine.
Thank you. Okay, sir.
Sure.
Thank you.
Sure. All right. So I think what we can do is maybe we can take a break now. Yeah. And let's continue after the break. Okay. All right. So I think Manish, we can take a break now. All right, great. So let's move on to the next topic. Now this next topic is about AS 11. Okay, so let's understand as to what is it that we are going to cover here. See, in AS 11, it's all about dealing with foreign currency transactions. Let's take an example of an Indian company. Okay, now, if let's suppose there's an Indian company, so what will happen? It will be recording its books of accounts. It will be recording all of transactions in INR. Yes or no? Yeah. So all the transactions this Indian company will be recording in INR. Correct. Now let's suppose this company borrows some money, say in USD. Okay, so it has taken a loan of 1 lakh USD. Now, can this company record this loan amount in USD in the books of accounts? Tell me, can the company do that? The answer is no. Yeah. But it's a transaction which the company has taken place, okay, or the company has done in foreign currency. Correct? So this transaction has been made by the company in foreign currency. So now AS 11 talks about principles, okay, the guidance which is in relation to such type of foreign currency transactions as to how do you record that. Okay, clear on the meaning of foreign currency transaction? Yeah. So now for recording this transaction in the books of accounts, what will the company be required to do? Company will have to convert this into INR. Company will have to convert this into INR. Now, how do you convert that into INR, which is then recorded in the books of accounts, is what we are going to now look at. Okay, under this AS 11. Clear? So that's one. Now, there's one more concept which is linked to this. Let's talk about that concept also, which is called as monetary or non-monetary assets or liabilities. Now, what is monetary? Monetary is something which is not, which is something, let me just go back up. Now, as regards this monetary, monetary is something which is determinable. Monetary items. Determinable. Determinable, for example, if you talk about trade receivables. Let's suppose company has a trade receivable of 10,000. Okay. Now this trade receivable of 10,000, is this a fixed amount which the company is expecting to receive? Yes or no? Yes or no? Tell me. Yeah. So company has a fixed amount, or you can say a determinable amount. Correct. Therefore, you will call this as monetary. And because it's an asset, so you'll call it as monetary asset. Now let's talk about, say, machinery. So a machine is appearing in the books, let's suppose at 50,000. Now, can we say that for this machine, this amount which is appearing in terms of what the company can receive is fixed or determinable? Tell me, will this be fixed or determinable? Answer is no. Answer is no. Yeah. So that's why, what do you call it as? Non-monetary asset. So what are the other examples of non-monetary? Inventory, for example, non-monetary. Cash will be monetary. Bank balance will be monetary. Similarly, on the liability side, you will have monetary or non-monetary liabilities. So trade payable, if let's suppose there's a trade payable of say 1 lakh, will you call this as monetary or not? Over to you. Will you call this as monetary or not? Over to you quickly. Yeah, very good. So Janvi, Soumya, they are saying yes. Why? Because here again the amount is fixed or determinable. But now we are not talking about amount to be received. We are talking about amount to be paid. Clear? Yeah. So clear on the meaning of what is monetary and non-monetary? Everyone? Clear? Okay, very good. So now let's move on to the accounting requirement. Now what we will do is we'll just straight away jump on to the accounting requirement. Now what is the accounting requirement? First, that's in respect of transactions in foreign currency. Okay. So the standard says that if there is any transaction in foreign currency, what do you do? On the date of the transaction, you convert that foreign currency into INR and then record this in the books of accounts. Now, what does it mean? Let's try to understand this with the help of one example. Say a company borrowed funds. What is the amount? Let's suppose it's 1 lakh USD. The funds are borrowed in USD. Say this transaction has taken place, say on 4th of June 2025. Right? Now, on 4th of June 2025, company will have to record this. Yes or no? Company will have to record this. So can you tell me what will be the accounting entry without amount? In this case, what accounting entry will be passed by the company? Over to you. What will be the accounting entry which the company will pass? You can just ignore the amount. Great. Anil says bank debit to loan. Right? And I can see the same response from Tanu, Mohammed, Tanisha. Very good. Correct? Julie has the same answer. All right. So now let me just record this accounting entry. On 4th June, company will pass an accounting entry. Bank debit to borrowings. Yes or no? Now comes the problem that, okay, this recognition is done, but how do you measure it? Yes or no? Amount you will need. So the accounting standard 11 says On the date of this transaction, means on 4th of June, you check what is the conversion rate. So if USD to INR conversion rate you pick up, what is that rate? If let's suppose that is 85, please don't check the rate today. I'm just taking this as an example. Fine. Yeah. So if you have to record this, what do? You record this using the rate of the date of transaction. This is also called as spot rate. Spot rate means rate of the date of the transaction. So if you convert this into INR, what does it become? 85 lakhs? Yes or no? Yes or no? It will become 85 lakhs, correct? So that's how a transaction will have to be recorded. Everyone clear? Mohit, Rohan, they are clear. So if there is any transaction in foreign currency, so this is the principle you will have to apply. Convert it using the rate of the date of the transaction, or in other words, using the spot rate. Using the spot rate. Clear? Yeah? Okay, now. This recognition that we have done, what do you call it as? Initial recognition. And measurement. What is the meaning of initial recognition and measurement? Whenever a transaction will take place, you will record it. So that is what you call as initial recognition and measurement. Yeah. Now, this standard also talks about one more thing. So this standard talks about subsequent measurement. What is the meaning of subsequent measurement? Subsequent measurement, you can say, is the measurement which the company will have to do after initial measurement. Okay, so if the company has to remeasure anything after initial recognition, what do you call it as? Subsequent measurement. Okay, Anil is saying reviewing the initial measurement. It's not a review. It's not a review, but it's a remeasurement. So you are not reviewing this, but you are actually remeasuring this. Means you will measure this again. Okay, so now in this case, what is the requirement? Standard says, now please understand this very carefully. Yeah? Very, very important. And very simple also. Standard says that if you have any monetary asset or monetary liability which is denominated in foreign currency, so that means for all the assets and liabilities, subsequent measurement will not be done. It will be done only for monetary assets or monetary liabilities, or you can say and monetary liabilities. Yeah, let me just make it and monetary liability, which are denominated in foreign currency. Now, what is the meaning of denominated in foreign currency? So this example that we look at, Say in this case, what do you have? On 4th June 2025, company took a loan. Let's suppose on 31st March 2026, this loan remains outstanding. This loan amount remains outstanding. So will you have this borrowing balance appearing in the balance sheet as at 31st March 26? Tell me. Tanisha says yes. Tanisha says yes. Yeah. I think Smriti, Soumya, Devu, they have the same answer. Very good. So now, in respect of monetary, not non-monetary, monetary assets and monetary liabilities, if they are denominated in foreign currency, then they are required to be remeasured. When do you remeasure them? When do you remeasure them? At the reporting date, means the balance sheet date. So let's understand as to how do you do this. So 31st March 26. Now, 31st March 26, we understand we have to remeasure this. Now, what is required to be remeasured? Borrowings. Borrowings, correct? Because you have a payable. Because you have a payable that is outstanding, right? Mohit is saying, can we call it as restatement? Yes. You may call it as restatement. You may call it as remeasurement. Okay. Anything that you want to call it as. Now, on 31st March 26, if you have to remeasure, what do you need? Again, the rate on that particular date. So for 4th June, it was available. Okay. Which is called as spot rate also. Now, on 31st March 26, let's assume, okay, now let's assume this rate becomes 87. Okay, now there is a liability which is recorded in the books at what rate? Tell me, there is a liability which is recorded in the books at what rate? 85, correct? Now, you need to update this liability at what rate? At what rate? 87. So will the amount of liability increase or decrease? Will the amount of liability increase or decrease? Very good. Shiv, Soumya, there, everyone is saying increase. So therefore, what should be the accounting entry on 31st March? Two borrowings. Okay, and revise this amount. So you'll say 1 lakh into 87 minus 85. So the amount of liability will increase by 2 lakhs. Correct? Now, where do you take the impact? So this impact will go to P&L under Forex. So we'll call it as foreign exchange difference. Okay. And now this foreign exchange difference is a loss. So you can call it as foreign exchange loss. Foreign exchange loss, debit, 2 lakhs. So where does it go? P&L. And where does it go? Balance sheet. This is called as remeasurement, or you can say restatement of any foreign currency denominated monetary asset or monetary liability. Everyone clear? Everyone clear on this? Any questions, any doubts on this? Tell me quickly. Yes, Tanisha, please go ahead with your query. I think Shiv has a query. Yes, Shiv, please pick up. What's your query?
Sir, my query is if
Yes.
dollar rate will decrease,
Yes.
then on 31 March it will be add on profit.
Yes, that's correct. Then you'll reduce the amount of liability.
Then what will be entry we will pass?
You tell me the accounting entry that should be passed then.
I think it can be
Yes, very good. Please try.
borrowing account debit to bank.
To bank.
Borrowing, yes, to bank.
No, it will be to foreign exchange gain. So the impact will
Yes,
be
yes,
taken to P&L. So there's no repayment. So that's why you can't credit back, right?
yes, 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 yes,
Okay, clear?
yes, yes.
Okay. Mohit is asking, sir, why is this required? That's the requirement of the standard. Okay, standard requires you to do this. I think Tanisha has also shared the accounting entry. Yes. But I understand, Tanisha, you had a query. Yes, quickly. Anyone who has a query, please raise hand and please pick up fast. So this is what is required to be done in case of foreign currency transaction and in case of foreign currency denominated monetary asset or monetary liability. Okay, so that's the accounting requirement that we have. So any questions, any doubts if you have, please let me know quickly. Then we'll pick up one example also. Okay, Tanisha is clear, very good. Then I understand there's one query from Mohammed. Yes, Mohammed, please explain what's your query. Yes, Mohammed, please go ahead. What's your query? Please explain. Yes, Mohammed, quickly, huh? I think Anil, you need to speak up, huh? Tell me, what's your query? Over to you quickly. Yes, Mohit, what's your query? Yes, Mohit. Mohit, please go ahead. What's your query? Mohit, do you have any query? Anil, do you have any query? No? Sure? Yes, Priyanshi, please go ahead.
Sir, in case a company follows cash basis of accounting, is it still required to follow AS11?
No, can a company follow cash basis of accounting?
No, sir.
Then what's the
Like, I mean,
relevance?
small companies.
No, so if a
Okay,
company
sir,
can't
got
do
it.
something, okay, so why would a company do that? So that will be incorrect. Okay. So accounting
Okay, sir.
standard will not talk about incorrect things or something which is not permissible, isn't it?
Okay, sir.
Yeah,
Yeah. Thank you, sir.
sure. Then I can see one more query coming up. I think Rohan has a query. Yes, Rohan.
Sir, in case of subsequent measurement, we have
Yes,
already converted the borrowing into the Indian rupees. So
right.
now, so now it is not dominated in foreign currency.
No, so denominated in foreign currency means the underlying repayment or receivable that you'll do. Okay, that is in USD. So if let's suppose you have to settle this liability, eventually you'll have to pay in USD only. Yes or no? Today, if you record something in your books in INR, so the lender will ask for USD or not? Tell me,
Sir, your voice is breaking.
is it clear now?
Yes, sir.
Okay, so I'm saying that let's suppose you have taken a loan in USD. So let's suppose there's a bank. Let's suppose from a bank in USA, you have taken a loan in USD. So in future, when you will repay that, will you repay that in INR or USD?
USD.
USD. Now let's suppose this loan has a period of 3 years or 1 year or whatever is that period. You have recorded this loan in your books in INR. Why? Because your economy or the accounting requirements in your country is that you should be recording this loan in INR. So does it mean that the bank in US will accept the repayment in INR?
No,
No.
no, sir.
So that means eventually you'll have to settle in USD. So that's what you call as foreign currency denominated. Just because you have recorded in INR, it doesn't make it an INR balance or an INR transaction. Yeah. You are recording this in INR because that's your accounting requirement. Clear? Clear, Ron?
Okay. Yes, sir.
All right. Okay, so Charandeep has a question. Charandeep is asking, sir, why is it required only for monetary? Why it's not required for non-monetary? Means this restatement that you do. See, one, that is the requirement of the standard, number one. Number two, if you look at non-monetary, okay, so their very nature is what? They are not determinable or they are not fixed. Yeah, so that's why you don't apply this criteria on them. Okay, yeah. So now what we will do is we'll pick up one question. Yes, quickly. So if you can just move on to this question number 1. Yeah, so let's look at this question now. Classify the following items as monetary or non-monetary: inventory, trade receivables, investment in equity shares. Quickly, over to you. So about inventory, will you be calling this as monetary or non-monetary? Quickly. Very good. Isha and Julie say they're non-monetary. Very good. Trade receivables, monetary or non-monetary? Monetary. Very good. Almaz is saying monetary. Investment in equity shares, monetary or non-monetary? Shiv is saying non-monetary. Devu, Soumya, Janvi, they are saying non-monetary. Rohan, Almaz, they are saying non-monetary. PPE, monetary or non-monetary? Rohit says non-monetary. Julie, Soumya, they are saying non-monetary. Shiv, non-monetary. Very good. So I think this part is very, very clear. Yeah, simple, easy to understand. Yeah. Okay, so now let's look at one more example. Okay, yes, I think Priyanshi has a query. Yes, Priyanshi. Priyanshi, you have a query? No? All right. So let's look at this next question. Goods purchased on 1st January X1 for 15,000. Okay, sorry. I think Priyanshi has a query. Yes, Priyanshi, please go ahead. What's your query?
Yes, sir.
Yes.
So I don't get it that why investment in equity shares is non-monetary.
Okay, so can you tell me whether PP is non-monetary?
Yes, that is non-monetary.
Why that is non-monetary?
Because sir, the PPE as a whole, we don't know the actual amount which to be determined, so it is undeterminable.
Okay, let me just say that in case of PPE, we are looking at a building. Building is a PPE or not?
Yes, sir, it
Okay,
is.
let's suppose amount of building appearing in the books is 10 lakhs. Okay, will
Yes.
you call it as non-monetary or not?
Uh, then it will be monetary
Why?
because
Will it
amount is
not remain
mentioned.
PP anymore?
It will be remain PP, but the amount is mentioned. No.
No, so are you saying that all of these things are monetary or non-monetary just because the amounts are not mentioned? So in such a case, you should call trade receivable as non-monetary, isn't it? Are you considering these as monetary or non-monetary just because their amounts are not mentioned? If that is the case, what is your assessment on trade receivable? Will you call it as monetary or non-monetary?
No, for trade receivables, it will be determinable that what will be the actual amount from debtors we will receive.
No, no. So Priyanshi, in this case, whether you are calling an asset or a liability as monetary or non-monetary, there has to be some basis. Yes or no?
Yes,
Now,
sir.
for one asset, you are saying it's non-monetary. Why? Because, sir, its amount is mentioned. For other, you are saying, sir, it's non-monetary because its amount is not mentioned. So, is the standard saying that wherever the amount is not mentioned, you will call it as monetary, or amount is not mentioned, you will not call it as non-monetary? Is that the criteria we discussed in relation to monetary or non-monetary?
Sir, actually, I was confused in non-monetary. I didn't understood that well. The
Okay,
example you
very good.
given no, you example you given no for machinery 50,000. So that also I thought that it should be monetary, but it was under non-monetary. So I was confused.
No worries. So now, in such a case, that means that you are unable to assess for all of these items, inventory, investment in equity shares, PP, whether they are monetary or non-monetary. Can I say that?
Yes, sir. As per the example machinery, I just wrote that PP is non-monetary.
No, so it doesn't matter that way. Anyways, let me just reframe this question for you, huh? Just to again make it slightly more simpler. So let's suppose we have three examples now. If the question says inventory, that's one. PP, second one. Third is investment in equity shares. In all of these cases, whether the amounts are given or not, they will have some amount or not. When you record that in the books, they will involve some amount. Yes or no?
Yes, sir. Yes, sir.
Okay. So if they will involve some amount, let me just put down the amounts. Let's suppose inventory is 1 lakh. Say PP is 2 lakhs. Say investment is 2.5 lakhs. Okay. Now, in all of these cases, can we say that their amount to be received, because these are assets to be received, is it determinable, is fixed? Can we say that?
Yes, sir.
So for inventory, are you sure that you will receive 2 lakhs, sorry, 1 lakh?
No, no. Like that, it is not fixed.
Correct. So that's what make it as not fixed. Okay. So for inventory, what do you do? So for inventory, what do? You will convert it into trade receivable. Means when you sell the inventory, it converts into trade receivable. And that is when it becomes kind of fixed. Correct?
Yes, sir.
And that's what you call as monetary.
But sir, in trade receivables also, if there is bad debt, then it will how it will be fixed?
No, but that's a different situation. If there is a bad debt. But as of now, the amount which is appearing, you have done the assessment. Okay, so that's why you are calling it as, say, for example, this trade receivable amount is 1 lakh. Okay, if let's suppose there's any provision, so you'll reduce the amount of trade receivable. Yes or no? So you
Yes,
can't
sir.
say if or buts. Any amount that you know is something which is determinable or fixed, which is not the case for inventory, which is not the case for PP, which is not the case for investment in equity shares. Understood?
Yes, sir.
Clear or not?
So clear, but still I am not. matlab, I don't think so that it is clear yet. I'm not
So why
sure
do
that it is
you?
clear.
Okay, so now what is your doubt? You need to specify, huh? You need to speak up. You need to explain that what is the doubt which still remains in your mind.
So what I am thinking that if this question was given to me that PP is 2 lakh in investment in equity share is 250, inventory is
Hmm.
1 lakh. Inventory I got it that by trade receivables we can fix it, but
Hmm.
PP in investment we cannot fix it.
Yeah,
Acha, okay,
that's
so we cannot fix it, so it is non-monetary.
correct. So I think
Okay.
you are yourself answering this question, isn't it?
Yes, sir. Yes, sir.
Clear now?
Yes, sir. Now clear.
Okay, very good.
Thank you, sir.
Sure. All right. So then I think we can move on to the next question. Again, a simple one. Okay, so this I think you can do very easily. Over to this question number 2. Goods purchased on 1st January for 15,000 USD and the exchange rate is given to you. Okay, so that's one. Exchange rate on 31st March, I think is given to you for some reason. And the date of actual payment is also given, which is in July. You are required to record these transactions. Over to you quickly. So can you tell me how do you record these transactions? Over to you. How do you record these transactions? Yes. How do you record this transaction? So when the goods are purchased, what is the accounting entry you'll pass? What is the accounting entry you'll pass? Tell me quickly. Okay, Ron says purchase debit to bank. At what amount? Can you also tell me the amount? Give me the accounting entry with the amount now. Okay, Anil says purchase debit to bank at the spot rate. Now, what is the meaning of spot rate? Tell me the entry with amount. Okay, great. So I can see some responses now. Okay, Julie, Ishan, I think they've answered this. Smriti has answered this. Very good with amount. Huh? Mohammed, Rohan, Chirandeep, Almaz. Okay, very good. So we'll record this at spot rate. What is that? 75. So you convert this into spot rate using 75. Now, on 31st March, can you tell me, is there anything that is required to be done? Is there anything that is required to be done? Answer is yes. What is that? See, when you will record this transaction, so your accounting entry will be purchase debit to trade payable. Correct? you will record the purchases, credit trade payables. That means as at 31st March, this trade payable or the sundry creditor that you have, what is that? That is denominated in foreign currency. It's monetary as well. Yeah. So therefore you will have to restate that. You'll have to restate that. Yeah. So if you restate that, what does it become? If you restate that, what does it become? So now you will reduce the amount of liability from 75 to 74. So therefore you will get a gain. Yeah, you will get a gain, or you can say foreign exchange gain you will have of 15,000. Correct? Correct? I think everyone is on that amount only. Yeah. Ajda says borrowings debit. No, you will not debit borrowing. So there is no borrowing over here. Yeah. Somya, there is no borrowing over here. It's a trade payable or a creditor. Yes or no? Yeah. So please be very, very careful. Huh? In the exam, you can make similar sort of thing. Okay. So it's a trade payable or creditor. There is no borrowing. Yeah. Okay. Very good. So now on 31st March, you have a liability recorded at what rate in your books? On 31st March, you have a liability in your books appearing at 74. Correct? Now, let's move on to 7th July. Now you are actually paying this liability. At what rate you are settling this liability? 73? 73? Correct? So now, when you settle this liability, which is appearing in your books at 74, so what will happen? Again, there will be a gain. Again, there will be a gain. Yes or no? Yeah, because you will make the payment at 73. Your liability is appearing at 74. So this differential again will go to gain. Yes. And what do you call this gain as? Again, the same thing. Foreign exchange gain. Foreign exchange gain. Clear? Yeah, simple. I think everyone has been able to solve this. Yeah, simple one. All right. So now let's look at one more example. I think it's very much on the same principles we discussed, but I think you can practice this. Yes, Priyanshi. What's your query? Yes, Priyanshi. Please go ahead. I think you have a query. Yes, Priyanshi. What's your query? Ron is saying last entry, I couldn't get it. See, the last entry is that when you settle this liability, you will settle this at 73. Okay. So what is the accounting entry you will pass? You will say trade payable debit to bank. Yeah. But trade payable you will debit at 74. Bank you will credit 73. So differential 1. Where will it go? Gain. Manish, can you please unmute Priyanshi? Manish, can you please unmute Priyanshi? Okay, yeah.
Yes,
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 Priyanshi.
sir. So my first question is that my chats are visible.
Yes, your chats. See, your chats are visible. Yes, definitely.
Okay, sir. Sir, my question is regarding the next year, 31st March 2002.
Are you talking about the second illustration? Priyanshi, are you talking about the second illustration?
The same second illustration.
Okay, yes.
Sir, see, we purchased goods on 1st of January 2001. So
Right.
the
I think there's some network issue. Huh? I lose you in between. I'm not able to hear anything if you are speaking right now. Quickly. Priyanshi, you're there? I think maybe there's some network issue. Priyanshi, you're there? Okay. All right. So I think there's some network issue at her end. Let's move further up. Any questions, any doubts if you have on this, please let me know quickly. On this second illustration, yes, Priyanshi, you are there again. Yes, please go ahead.
Yes, my meeting was disconnected due to network
No
error. Sorry.
worries. No worries. Yes.
Yes.
Yes,
Sir,
tell me.
my doubt was, see, in second question, on 1st January 2001, we
Right.
purchased goods.
Right.
So the difference of that 1 rupee will be charged in 2001, 31st of March, right?
Correct.
Then, sir, we have paid actually in July, 7th of July,
Correct.
at rupees 73. So the gain of this 1 rupee from 74 to 73, this 1 rupees will be in charge, means this will be mentioned in 31st of March 2002, right?
Yes, that's correct. So
And
there are
sir,
two financial years.
yes,
Let
sir.
me just
And
show this to everyone.
yes,
So one is this 2000 x1 x2. Second is x2 x3. Okay. So if you look at this first remeasurement, which will have a gain. So
yes,
this
sir.
gain of 75 minus 74 1, where does it go? In this financial year. Then in the next year again, you'll have a gain. So when do you settle this? In this financial year. So therefore this gain of 1, when do you record it? On the date of transaction. Yeah,
Yes,
on
yes.
the date of transaction. So that's why you can say it's spread over 2 financial years. Fine. Yes. Yes,
And
Priyanshi, please go ahead.
and sir, for 2001 and 2, there will be two impact in balance sheet as well as in profit and loss account.
Yes, that's correct.
And in 2002 and 3, there will be only one effect that will be in profit and loss account.
No, that's incorrect. Now there again, please understand. When you record this, so what do? You will debit purchases. You will credit trade payable.
Yes.
On 31st March, you will have a trade payable appearing at 74. Why? Because you have restated this.
Hmm.
Now, in X2, X3, you have this balance sheet item. So you'll settle this or not? So you'll say trade payable debit 74 to bank 73, and the differential, you'll say to forex gain 1. So there has to be a balance sheet impact always. Clear?
Yes. Yes, sir. Yes, sir. Thank you.
All right. So then I think if you look at this next illustration, illustration 3. So this is all about that borrowing. Yeah, quickly, please check and confirm. This is something that we have already discussed. Okay. Yeah. Already covered. Yes or no? Yeah. Ron is saying, sir, the years you have picked up are different. Okay. So I think I can change it. So this will be x0, x1, and you can make it x1, x2. Now, okay. Now, okay. Yeah. All right. Okay, so I think the next question you can just look at this all about that borrowings, huh? Quickly. Yeah, you can solve this on your own. Yeah. All right, great. So now what we can do is maybe we can just look at any questions, any doubts that still remain from your side, and we can just close it here. Please understand that we are not yet done on this accounting standard. Yeah. So a part of this accounting standard we plan to cover in the next session. Okay. Yeah. So any questions, any doubts that you may have, now we can discuss that. Over to you. Any questions, any doubts that you may have, let's discuss that. Okay, Tanisha is saying, sir, it's clear and it's easy to solve. Yeah, so definitely, yeah, for the remaining part also, you should not find that to be difficult. So don't worry. Ishan is asking, sir, rate, oh, sorry. I keep getting these queries. Okay, so very difficult to track. I would request you to please speak up. Ishan, if you can just speak up. What's your query? Yes, Ishan.
Sir, I just want to ask, right? Like the company decides the rate of depreciation, so it's an accounting estimate, no?
See, as I clarified also, now there is no rate regime. Okay, so when you use this term rate of depreciation, it's not relevant anymore. And please be careful in the exam, don't use such terms. Now the companies can only follow useful life. Okay, so when you talk about useful life, that's an estimate.
And sir, the method of depreciation is accounting policy, right?
No, so there again, see, please try to understand that two things. One is the useful life. Second is the method of depreciation, right? Let's suppose we are talking about machine. We are talking about plant and machinery. Say the company has considered useful life of 15 years and the method of depreciation is SLM. Now both of them we understand conceptually are what? Estimates. But when the company will disclose its accounting policy, in its accounting policy, in relation to accounting of PPE, accounting of depreciation, what will the company write? That the company follows a depreciation based on useful life. For machine, the useful life is 15 years. Method of depreciation is SLM. Okay. So to say that these two are estimates, yes, that's correct. Which is disclosed as accounting policy of the company. Clear, Ishan?
But sir, accounting policies are dependent on accounting standards, you know?
Yeah, that's correct.
So company
So
can estimate the method and useful life and then disclose them as accounting policies.
yes, of course, because these two are estimates only. So we are not saying that these are not estimates anymore. They are estimates only. Yeah. But
Yes.
what is an accounting policy? Please try to understand. Accounting policy means for recording a particular item, what basis has been considered by the company? That's the meaning of accounting policy. So some of them could be based on estimates, some of them could be based on facts. For example, this is one accounting policy of the company. Say the company has another accounting policy on inventory. Now here the company says that the inventory is valued using FIFO. Now can we say that this valuation based on FIFO is an estimate?
Yes, sir.
Tell me, can we say it's based on estimate, Ishan?
Yes. Yes, sir.
No, FIFO is not an estimate. It's fact
Sir,
based.
but the method is being estimated, no? Though that they have to follow FIFO or weighted
No,
average.
so the method is not estimated. On the method side, company is very clear. Company is not confused. So company is very clear that this method is FIFO. I think you are getting confused here. Let's try to understand. On the policy side, company is clear as to what they are doing. But in terms of what they are doing, is that based on estimate or based on fact pattern? So when you value inventory, do you involve any estimate if let's suppose FIFO is involved? Tell me.
No, sir. No, sir.
No. So that's why it's not an estimate. Yeah. But
Yes, sir.
when you say that the method of depreciation is involved, useful
Yes.
life is involved, that's all based on estimate. Clear?
Yes, sir.
Yeah.
Yes,
All
sir.
right. All right. Okay. Then I can see one more query. Yes, Shiv, please go ahead. What's your query? Yes, Shiv. I think you have raised hand.
Yes, sir. My query is I purchase goods on 1st January, on that
Yes.
day rate was 75,
Right.
but at the payment when we done payment on 1st July, rate
Right.
was
7th
73.
July.
7 July rate
Right.
was 73, and
Right.
on 31st March rate was 74.
Right.
So what is actual profit for company?
I,
75 minus 73 or 74 minus 71?
you tell me what is the actual profit for the company? You tell me quickly.
I, I think uh, 2 rupees.
2 rupees. The only thing is that this gain of 2 rupees, which is an actual profit for the company, is not getting recorded at the time of payment.
Okay.
Yeah, so this one you recorded this in a financial year. Second one you recorded this in the next financial year. So over a period of 2 years, you have recorded a gain of 2 only. Yeah, but in
Okay.
our situation, it got spread out. Clear?
So, sir,
Sorry?
on on purchase date,
Yes.
what amount we will consider? 11 lakhs 25,000. Na?
So you can just compute this amount. I think 15,000 multiply with 75. What do you get?
Yes, it is 11 lakhs 25,000.
Yes. So that's how you will record the purchase.
The
Yeah.
on 31 March,
On
then
30. So I think you can compute all of these amounts accordingly. Yes or no?
okay, sir. Yes.
Yeah. All right. I think I'll have to come back to your query in the next session. I think you're talking about those chapters, huh? Okay. Then I can see one query coming from Tanu. Yes, Tanu. Yes, Tanu. What's your query? Please pick up.
Sir, in illustration second,
Sorry.
if sir, uh, sir in illustration second, my query is if in case in place of 73 अगर हम 76 पेमेंट करना पड़े तो फिर हम एंट्री क्या करेंगे?
आप बताओ क्या अकाउंटिंग एंट्री होगी?
सर फर्स्ट केस में तो हमें प्रॉफिट हो रही है 1 रुपए का और वो
Let's leave that. What is done is done. Now you tell me when you settle this liability at 76. So what will happen? You have a liability appearing at 74.
यस सर
You will settle this at 76.
यस सर
So there will be a loss of 2.
यस सर
Okay. All right. Any more questions? I think Smriti has a question. Yes, Smriti. Yes, Smriti, please go ahead.
No, sir. I just wanted to clarify. So
Yes,
that, like, can we say that company's accounting policy of SLM is based on accounting estimate of useful life? So is it correct,
that's
sir?
yes, that's correct.
Okay, sir. Thank
See,
you, sir.
eventually, because you are disclosing this as a contingent policy, so that's why I clarified to Ishan. Okay, so because somewhere he had this confusion that is it a policy or an estimate, and if the company is considering this as an estimate, okay, so that's where I use this. And even if you look at the financial statements of any company, pick up, so in their accounting policy, they disclose this, but that doesn't make them a policy. They will continue to remain estimate. Okay,
Okay, sir. Okay. Thank you, sir.
all right, all right. So, do we have any more questions? Otherwise, we can just close our discussion here. Yeah. Okay. So once again, thanks everyone, and thanks for this wonderful participation. I would request that please make sure that you revise whatever we have covered today. Why? Because in the next session, we are going to continue on this accounting standard. So very, very important that you revise. Okay. All right. So I think Manish, we can close this now. Done.